Hey guys, welcome to Forex Beginners Guys Video 101. In this series, I will be breaking down and explaining very important key points of how this industry works, what it consists of, and what will allow you to be part of this. Many of you are probably brand new to this industry. These will allow you to understand before you jump right into it. And if you're someone who's already been doing this for a while, this can refresh your memory, this can refresh your knowledge. So without taking any more time, I am going to get right into it. So, what is Forex? Forex stands for foreign exchange of currency, which happens in the foreign exchange market. Now, imagine you're traveling to another country and you need to exchange your local currency for the local currency of where you're traveling to. This exchange process is happening on a massive scale every second of every day. In simple terms, Forex is the market where currencies are bought and sold. It's the world's largest financial market with over 6 trillion being traded every single day. That's more than any stock market, making Forex the place to trade for people like yourselves and myself. Now, the most important question that everyone has, what is a currency pair? What consists in a Forex industry? How do I understand what's the step? So in Forex, you trade currencies, okay? And when you're trading currency, you can't trade a single currency. It has to be a pair. You might be thinking, how do you trade currency? Well, unlike regular stocks, Forex isn't about buying or selling just one currency. Instead, you always trade two currencies at once. This is what we call a currency pair. For example, if you see Euro USD, EUR/USD, it's an exchange rate between Euro, EUR, and US dollar, USD. When you trade it, you're buying one currency, like the first one, Euro, EUR, the pair which is at the beginning of the currency pair is the one that you're trading, while selling the other one. So when you're buying EUR and you're selling US dollar, if that makes sense. If euro goes up in value, you can make profit. That's how a currency pair in Forex works. Why is Forex so popular? I get this question asked so many times that, Kay, why is this industry so popular? So, well, there's a few reasons, firstly. The first reason is massive liquidity. Okay. Forex is so big that you can trade anytime, anywhere. Want to trade at 2 a.m.? No problem. The markets open 24 hours a day, 5 days a week, from Monday to Friday. The second very important point, opportunity for profit. Forex moves fast. Currency prices go up and down, creating countless opportunities for traders to buy and sell. And the third point, global reach. It's not just in one place, but operates across the world from New York to London to Tokyo. It's a market that never sleeps. That's how you take it. Now, you want to know a fun fact? Forex doesn't have a central exchange. Instead, it's decentralized. What does it mean? It means trades happen directly between the buyers and the sellers through the banks, brokers, and other financial institutions. Think of it like a giant web of people all trading currencies with each other. That was the ending of the first video, Forex guide, video 101. Make sure you watch the other videos as well if you're brand new or even if you're someone who's been in this industry for a while to refresh your knowledge. I'll see you guys in the next episode.